Good morning, good morning, good morning. Welcome to another week. Thank you for dialing in to our Saxo Spotlight. My name is Jessica Remy. I'm a market strategist here in Australia, and I'm joined by, of course, our one and only Redmond Wong, who's also a market strategist, and he covers the Greater China regions. And today we'll be passing you through what we can expect in markets this week and where attention will likely be. But we just want to quickly pause and reflect with what is going on in overall equities before we take you through what can expect this week. So as always, it's always good to pause and reflect and see how markets are going. That can give us a good indication of where we go next. So, of course, at the weekend, we saw US equities give back nearly all of Thursday's gains. So the S&P 500 lost 2.4%, and it was down almost 2% over the week, while the Nasdaq erased virtually all of that gain that we saw on Thursday. Now, it comes because the latest piece of economic news from the US was, of course, on Thursday, US inflation data, which was much hotter than expected, giving the Federal Reserve room to be more aggressive with rate rises. So that was the CPI data, the Consumer Price Index data that came out on Thursday. And then, of course, on Friday, we had what's called University of Michigan's survey of inflationary expectations. So they gauged consumers, and they found that consumers' expectations of inflation actually picked up for the first time in 7 months. So now consumers are quite bearish. They're expecting prices to rise in the near term and longer term. So all in all, on top of the CPI data on Thursday and this week sentiment read from the University of Michigan, equities, of course, the broader indices went back onto the back foot. Adding into the bearish sentiment, we also heard from China's President Xi Jinping, who basically poured cold water on the fact that China, there was speculation about potentially relaxing their COVID-0 policy. As a result, the oil price fell, and commodities also fell as well, not only on the back of an expectation for more rate rises to come this month and next month from the US Federal Reserve, but of course, because the biggest consumer of commodities, China, is likely to remain in lockdown as the devil in the detail goes. So as a result, all US equities fell. One of the biggest noteworthy movers, though, was Tesla. They were down the most in the mega caps, down 7.6%. So they're now at a 16-month low, $204, and that is, of course, ahead of their results this week. Also this week, a huge week for markets. So we've got US housing data, Fed speakers out, Chinese economic data, which we're going to get the latest on from Redmond. And down under here in Australia, we've got RBA meeting minutes out tomorrow, and jobs data for Australia is also out. Plus, on the US corporate side, as we mentioned, Tesla is reporting. So too is Netflix, IBM. And on the banking side, we hear from more in the finance space, American Express, Bank of America, and Goldman Sachs. But without further ado, let's just hand over to Red on what we can expect this week, and also to take us through the latest US economic developments, and also take us through China as well. There's so much to go through. Redmond.
Hi, yeah, thanks, Jessica. Yes, and in the US, I think the one thing I think I would also like to mention is the bond yield. The 10-year bond yield now is trading at 4.142 level, above 4%. Again, that's certainly add to the nervousness in the equity market. And yeah, I mean, there's basically the framework. The playbook is the inflation is not coming down. And then the Fed is continue to sound very hawkish, and then now, I mean, they're talking to be more restrictive, and the money market curve in the US, and pricing it almost for sure. You have a 75 basis point rate hike on November 2nd, and when we have the FOMC, and then in December, Now is the possibility is already table is maybe we might is have 75 basis point as well. I mean that's not fully priced in, but people are start is pondering this possibility and pricing partially, and some of the Fed officials also quite receptive to that idea, even though of course they won't say it yes or no. But I mean, we are expecting the Fed will continue to sound very hawkish, and they try to anchor inflation expectation. Why the U of Michigan survey of inflation expectation is important? Because the long end of the curve, the Treasury yield is very much driven by expectation, and so the Fed is really want to make sure that is not running away, and so that's why I think both the traders and the Fed officials watching it very closely. And this week, as Jessica mentioned, housing data in the U.S. and housing starts. I think that gives us some. I think the investor will be very closely watching it because it's mortgage rates giving jump to such high level. And then is to see what will be the impact on the housing market and whether you will see significant slowdown or not. And the other one among I think is the other one. I think I would emphasize maybe the initial jobless claim, even though that is a weekly data, it come every week, but because of I think it's important to watch whether the labor market is cooling down or not. So so I think that is also a important data to watch in the U.S. side. And then is on China. I think I mean it's a GDP number, but I mean it's because of the GDP in the second quarter was very low, and this third quarter probably with the markets economists are expecting some rebound there, and to jump back to 3.4% year on year, and that probably is one of the reasons for that is because we have some relaxation of lockdown in late second quarter, and the recovery was very slow, and that spilled over to the third quarter, and until in September, of course, we have the pandemic control tighten again, but is in some of those spillover and pent-up demand still can help the GDP in third quarter. But and then it's on the retail sales and industrial production in China, and retail sales probably will be weak, as we mentioned about the lockdown came in again in late September. So I think that's Jessica, maybe you want to talk a little bit about Australia.
Yeah, great point. I think it's a great idea to speak about Australia. So we do have the RBA meeting minutes that are out tomorrow, and this will be watched like a hawk, particularly because our house view is now that the RBA has pretty much mapped out peak hawkishness is behind it. What does that mean? Well, it means that they're likely to be more dovish ahead, and this is because the Australian economy is not as strong as the US, and the RBA doesn't really have the firepower to keep aggressively rising rates. In saying that, though, of course, we know that the last rate hike by the RBA, when they met on the second Tuesday of this month, they only hiked rates by 0.25%. And they're actually now saying that rate rises will probably continue. They alluded to rate rises continuing until the end of next year, and then the potentially be a pause and reflect moment. Our house view is that they could continue, rate rises could continue beyond that. But basically, if you look at what the RBA last mapped out last month, there's now the thinking is that peak hawkishness is definitely over, and dovish sentiment remains. So how do you play this as a trader? Well, this actually means more potential likely downside, given the RBA is so dovish, more downside in the AUD versus the USD, and as such, that's a reason why the Aussie dollar is remaining at fresh lows, and in fact hit fresh lows at the weekend as well. And that is, of course, because as we were both saying, we're continuing to get stronger than expected data and more hawkish concerns with inflation picking up and inflation expectations picking up, and that will support continued rate hikes in the US. So you've got the biggest federal bank, the Federal Reserve, that you can't really fight the Fed, and then the RBA. And then, of course, this week, staying on the Australian theme, if I can just for a sec, Redmond, I think it's also really important to mention on Thursday, we, of course, get the all-important employment data. Now, this is really key to look at because the RBA says that they see inflation subsiding, remember, later in the year, peaking later this year. And they also said in their last, when they last made their rate hike, they said that they see unemployment rising, i.e. employment falling. So the devil will be in the detail on Thursday. Right now, the market is thinking that the unemployment rate will remain exactly where it was last month at 3.5%. However, what we will also be really watching, and what's really important for you to watch as well, is the amount of jobs that were added to the US economy last month. So that number of jobs is actually trickling down. So there's less people gaining jobs. So really showing that what the RBA is thinking is coming to fruition is that we're likely to see unemployment pick up. But so we'll wait and see what happens with that detail. But the third final thing for me to mention, Redmond, before handing back to you, is that Australia, for those that are dialing in from Asia, not sure if you're aware, but Australia's actually been gripped by La Nina. So it's gripped sooner than expected, and we're not expected to see La Nina peak until November. So this is actually causing flooding and has actually wiped out some entire crop fields now in Australia. Wheat crops have been decimated. Wheat fields have been decimated by flooding. So in some instances of Victoria, flood fields, dams have been burst, and wheat crops have been completely decimated. So this plays into our thinking of our house view, is that we're quite concerned about food price inflation picking up again. And this, again, feeds back to what we're speaking about as well, higher for longer inflation. So that's something to keep in mind. And I guess wheat prices, although they are lower today and were lower on the weekend, they're remaining supported, it seems, at these higher levels, just on the back of the lack of supply fears really starting to grip the market again, Redmond. But is there anything else that you think that we should cover off before?
Since we mentioned about the dollar, we have to mention about the dollar yen. It's dollar yen jumped to near 148, I think 149, and it's the highest 148, 83, 86 level, and now trading 148.50. So it's not far away from the 150 handle, and the market may try to test it. And we have Japan inflation data, CPI, coming on Friday. And market economists are expecting it to go up a bit. And for the CPI express food, we expected to come at 3% year on year. And for the core, and that's the fresh food and energy, is expected to come at 1.8 year on year. And that both are slightly higher than last month. But of course, this BOJ is nobody expect at the moment. Market not expecting BOJ to change the monetary policy, to make any adjustment to the monetary policy, despite some CPI inflation pressure there. So that will be left to the MOF to see whether they will do some intervention if we go to try 158 dollar yen. And but because it's BOJ's MOF is not getting the support from other countries, so it's rather difficult for them to really change the trend of the dollar yen. So especially when U.S. interest rates still going up, so so dollar yen still probably will try upside, And then is since talk about CPI is last Friday we have CPI in China. Actually, that was quite benign. And if you exclude food and energy, the CPI in September in China actually just up 0.6% year on year, and that's very low. And so that is actually that help to fill some speculation on there may be more room for the PBOC to ease monetary policy. And you have PBOC's governor Yi Gang, and during the G20 meeting with other finance minister and other central banker, he said in his speech, he did mention that we will urge bank to make more loans. And also the finance minister in China also said in the same meeting in the G20, he told the audience that China will roll out more pro-growth policy. That but seems the market are not really reacting that much, and because I think probably it's all eyes still on what's coming out from the National Congress of the Chinese Communist Party, and seems from General Secretary Xi's speech yesterday, a 2-hour speech, and basically is most of the existing policy priorities pretty much remain unchanged. And so most likely the next 5 years will be some kind of continuation of what General Secretary Xi has laid out in his blueprint for China. So also, Jessica, you mentioned is the dynamic zero COVID probably will still stay here. So that at Saxo, we are not expecting any changes, but there were some analysts expecting some shift back to economic focus in the economic development, or also there's some relaxation of COVID zero COVID. I think these investors may be disappointed from the speech yesterday. The meeting is still going on, and until Saturday, and then they will elect the Central Committee, and then on Sunday, next Sunday, this coming Sunday, that they will have the first plenary meeting for the 20th Central Committee. In that meeting is important because it's in that meeting they will elect the 25 member of Politburo, and then also the 7 member of the Standing Committee of the Politburo. That is the highest governing body basically for China. So who are going to get in there, and that would be important information. So yeah, I think that's all for me. I'll pass it back to you, Jessica.
Thanks, Redmond. Just conscious of time, but I think it's really important that we do mention one final thing. We've covered a lot of stuff that you can hopefully take away and utilize today, this week. But I think we just would like to probably end with the fact that the commodities basket at Saxo has continued to outperform overall equity themes that we cover, and you can refer to our equity baskets under stocks, and then you can get some inspiration for some company names that you might like to look at and reflect on in the commodity sector, because we do see that commodities will continue to outperform the market over the longer term, given the lack of supply. Regardless of the intraday moves and the weekly moves, we continue to see upside in commodities. The other final thing that that we want to mention today is that with earnings season amongst us, it's really important to reflect on the fact that a company's share price is actually being driven not by if its results were stronger or weaker than the prior quarter or year. It actually their share price will move if they beat or missed expectations that are out there in the industry, known as consensus. So please have a look at our daily notes that we put out. You can see those on the platform, or if you don't have those emailed to your hot little hands, please ask your GST or your RM, and we can add you to our our email list. But I also just want to give you some examples of how a stock will move in either direction when their results beat or miss expectations. So Delta Airline, they were the first major US airline to report results last week. And I guess they reported with a bang. So they reported revenue that rose to about 14 billion. So that beat consensus, or what the market's thinking was. So their shares actually jumped up 2.3%. And of course, when a company guides for a stronger outlook, that also provides a positive sentiment boost as well. And as such, speaking about this, Delta actually reported that they see revenue picking up as well in the following quarter. So they see revenue rising in the vicinity of 5 to 9% compared to 2019, I guess, if you will. So they're just some examples of and some things to think about. So when someone reports a better than expected result, likely to see a share price rise. Weaker than expected result, you'll probably see a paring back. With that in mind, please do keep an eye out for one of the most traded stocks at Saxo that reports later this week. Tesla, of course. Also, we'll be watching Lockheed Martin on Tuesday. And of course, Redmond actually put in a note as well that investors should be paying attention to CATL or CATL. They're the world's largest battery maker. So keep an eye on their results. We'll be covering what you need to know in our daily note. And as always, we wish you a very happy and safe week. And please reach out to your RM or your GST, whoever your amazing Saxo point of contact is. And we look forward to seeing you the same time, same place next Monday. Thank you very much for all of us here at Saxo, and take care, and we'll see you soon.
Thank you. Bye-bye.